It's shortly after 8 o'clock on Monday morning in the port of Hamburg. Goods from around the world pass through here, 24 hours a day, 7 days a week if business is good. And business is extremely good right now. Around 120 million tons of freight will pass through the port this year, after a 10% rise in the first 6 months. A lot of that is related to Asian trade. Management is certainly happy. But even though the figures are good now, what about the future? What if global debt continues to grow and everyone has to start saving?
For example, what if China has problems collecting its returns on investments it made in the U.S. and has to curb spending? Then we would see problems as well.
A fresh crisis would hit the port of Hamburg. A global economic dip would mean less trade. 9 o'clock on the Frankfurt Stock Exchange. The start of a new week after days of panic reactions on the trading floor. Robert Halver is a market analyst at Baader Bank. He still hasn't recovered from last week and its high losses. He now hopes this week will be easier. A positive start, he says, but who knows if it'll last. The current crisis is far from over.
In general, we have a lot of negative factors. There are lots of bad things happening. We have the Eurozone crisis and government debts, a fear of recession. The U.S. is no longer the economic giant it has been in recent decades. Those are all negative facts which are weighing down on the markets.
A short distance away in downtown Frankfurt. A lot of people don't trust the stock exchange anymore and are putting their money in gold. It's seen as a safe investment in times of crisis. Andreas Frühwirt deals in precious metals, and the number of buyers is on the rise.
If you look at the development of stock market prices over recent weeks, then it's only reasonable to secure your money in some form or another. You need to spread your money, and precious metals are a good alternative if you are looking to safeguard your assets.
Around the corner, there's a different kind of activity. This business buys gold. This lady and many other people are taking advantage of the high price of gold to convert jewelry to cash. There's a constant stream of customers, and business has grown by 40% in recent months.
People are selling all kinds of precious metals, rings, chains, gold, fillings. This is gold from fillings. People sell gold watches. We remove the clockwork and the glass, everything that isn't gold, and melt down the rest.
Just outside this office building in Hamburg, there's a weekly market. The workers are on their midday break. They're happy to get some quick and cheap snacks. Susanne Krogmann comes here every Monday with her fruit and vegetable stall. She's been in the business for 15 years and has weathered crises in the past. She's not worried.
I don't trade on the stock exchange. Not at all. I'm not worried about my money.
It's all invested in her goods, she says. The customers at the market don't seem worried either. Most Germans don't think that the crisis will be long or deep.
It's going to be like the last crisis. The market will recover.
I don't think we have a lot to moan about. Things are a lot worse in other countries.
I've just bought an apartment as a way of safeguarding my money.
A lot of people have come up with the same idea, and that's good news for estate agent Felix von Sauken. He runs the Frankfurt offices of Engel & Völkers, a nationwide German real estate company. In times of crisis, a lot of people invest in property. Prices have risen by 20% over the last year. Someone else looking for a safe investment. We're in the upmarket West End district, Frankfurt's most expensive residential area.
There's a whole new group of customers at the moment, those who are looking at real estate for the first time. People who were spoiled by high returns on the stock markets and viewed property as not bringing enough return. Now they've realized how risky the stock markets are, and they want something which may be a little boring, but at least it's safe.
The dentist buys an entire house. He's happy to have found a safe place for his money. Back in Hamburg, this is Thomas Straubhaar's garden. He's a business analyst and always works at home on Mondays and not just in the garden. As director of the HWWI Global Economic Institute, he's convinced the euro will be around for some time to come.
In my view, the fundamental data on the global economy give us no reason to believe that we're sliding toward another crisis. Quite the opposite. The macro factors are all stable. They all point in a positive direction. So there's no real foundation for what's happening on the markets at the moment.
But despite his optimism, Straubhaar says Europe's politicians need to act quickly. And he says they should act in unison. That could mean joint Eurobonds, which would mean nations with high debts would no longer have to pay such high interest rates on borrowed money.
For a long time, I was skeptical and basically against focusing too much on Eurobonds. But now I think the situation is so complex and critical that there is no other way to really reduce costs. Eurobonds are a bad solution, but the best one available. Eurobonds could ensure that individual countries don't end up in difficulties due to market speculation.
Back at the Frankfurt Stock Exchange, it's 3:30 in the afternoon, and Wall Street has just opened. The Dow Jones has started positively. That's good news for German trading, but it's not enough.
I would really like Mrs. Merkel and Mr. Sarkozy to say, yes, we want to keep the Eurozone, but we need a way of doing so. Can we survive long-term with all 17 member states? If not, then we have to say who has to leave, for example, Greece and Portugal.
The debt crisis is far from over. But at least the DAX registered an upward swing on Monday.